Afternoon. It is Saturday, August 1st at 10:13 p.m. The Dow Jones finished up 0.5% Friday. S&P 500 0.70%. Nasdaq 1%. Nasdaq 100 almost 0.5%, a little bit more, and the Russell 2000 finished down negative 0.5% here. Let's get into what happened on Friday. So on Friday we finished with a doji here on the Nasdaq, and really what that means is we had indecision. We still below our 55 institutional line, and the number one question a lot of traders have is this just a bottom, right, or an oversold bounce? Okay, let's get into it. We do have a rate of change flipping up here to positive, but not quite over it here. And I do find it fascinating that we did not get above our 50% line here on the RSI, so that's one thing I want us to pay attention to. And what kind of filled, the rally here? Was this just a short squeeze covering here due to this guy basically not knowing what to do here? When we drop our time frames here, we can see basically what happened on Friday. I dropped an anchored VWAP right here. Right now, levels that you want to pay attention to are 673 here. That's your point of control. You don't want to break it. And I want to highlight the number one mistake traders make, right? So remember on Friday, we wicked up right here, literally almost at open. And then we never quite got to that, right? So one thing that I tell traders too is like mark your opening price here, okay? Mark your low price here, and then mark your medium midday price here, and kind of go from there. Sometimes traders will go long, traders will go long here, right? When you never came back up here and then hold a position all the way back down here throughout the day. This is your call wall right here. This is a control bar right here. I reference it right over here. So this is what a control bar looks like here. And then you just basically have price action kind of chopping all the way in between here, okay? Here's your bottom here, here's your top, where's your mid range here. This is a trade you don't need to get involved in, right? We're not really breaking out from here, okay? This is your flush shown to the downside. This is your value area low, right? This is your point of control, literally controlling the point. Again, call wall here, and then your value area high here, right? And again, a control bar is, right, controlling price. We don't need to get involved here, right, because it's a war zone, right? We don't actually have a breakout from this level here. All we had was an oversold bounce here. You can look at the RSI to kind of confirm that. And again, you're going to have divergences everywhere. That's just the name of the market that we're in right now. Going over here to the S&P 500, we have our flush zones marked down here. We have our point of control right here. And unfortunately, or I guess you could say fortunately if you are a bull, it is leading the market here, in my opinion. We did get above this 50% line here, again, where the Nasdaq was not able to. And we do have a better rate of change shift here. And again, we had a beautiful bounce off that 55 EMA institutional level. The levels I'd like to watch here are between the 760 zone and 756 zone. Please reference this point here and make sure just to pause the video, go back to it. There's no way a lot of us can just watch 5 minutes of a video and expect to make $1 million. Okay, we have to put in a bit of time and a bit of effort. It really took me a lot of time to kind of make this video today to mark all my charts off and make sure that my levels, for me at least, are accurate. Okay, so one level that I'm going to be watching here into opener is the low of the day, right? The median point, the point of control, and the high of the day, the rejection point, which happens again to be what? The call wall, okay? And before we can kind of also understand what is moving the market, we have to understand 4 different layers and how they're shifting the market. What changed on Wednesday through Thursday that we just decided to rip up 30% here? It started with Microsoft, but in order to start with Microsoft, you have to start with what's actually pushing up the market here. So we have 3 layers here. So you have SOX, you have LCRX, LAM Research, KLAC, ASML. You have Micron, SK Hynix, SanDisk, Samsung, CXMT. Don't know how to pronounce that. Not going to try to. Then you have your layer 3s over here, right? Kind of like quote unquote final touches. There is a layer 4 here, but it was just taking me too much time to make the chart. But let's get into how this all ties in together. What I really try to do here in the videos is to try the macro, okay, the what, the why, the fundamental, the use case, and then the technicals, the charts, what we talk about, right? Flush zones, technicals, downward trend lines, dojis, etc., right? So going over here, right, in order to understand what's happening here, right, we need to start with here, right? So we have a shortage here, right? AI data centers start eating up memory faster than it can be made. Nobody has changed a price yet, right? So we have the makers, right? Who are the makers? They own the factory and sell the chips. Right, we have orders are stacking up, but they're still shipping at last year's prices. None of it shows in earnings yet, allegedly, okay? We have the equipment here, right? Who's selling the equipment? We have AMAT, LRCX, KLAC, ASML. Then we have layer 3, the tested materials, onto Camped, Bezi, I don't want to pronounce that right. Then we have the neighbors, right? Nobody's connected to them. Nobody's connected these to the storage yet, right? WDC, Seagate, CMO, RMBS, and obviously we have the buyers who are the buyers, right? Dell, HPQ, Apple, and so forth, right? So, right, what happens, right, when, and so let's go take a look at the stocks here. We're going to start with layer two once we get into these other charts here. We did gap up, right? Again, short streaks covering. We don't really have enough information to confirm any reversal yet. My level mark here for the downside here is a flush zone at 455 here. Every single time, right, we come down here, right? We have Donald Trump tweeting, Nvidia, CEO Jensen saying stuff, AMD, right? Samsung coming out bogus headlines. From a lower time frame perspective here, but using it with the daily in conjunction with, we have our point of control here that we don't want to break, which is 500 here. Currently we are at 504. We have our call wall right here, and then we have our levels right above here, right? So we have a macro, fundamental, and technicals here to the max, but really this entire run, again, right, is driven by what? Headlines with assumptions of that, hey, we have a fundamental use case, we're really going to keep using these data centers here, right? One level that I'd like to watch here, if we continue this gap up here, right, is this can turn to a what? If you watch my other videos, make sure that you do like, share, and subscribe. They all connect to each other, right? 3 white soldiers. So these two bars here, right, can end up like 3 white soldiers, sort of like this, but with bigger bars here, okay? And again, this chart here, like a reference with SPY, right, it's going to go ahead and look like almost every other chart, which is ridiculous, right? Amazon Crowd, SanDisk, Micron, everything else. That's why I would like to watch this level up here, okay? So once you get back up here, you have an upper extension up here all the way to 872, believe it or not, okay? You do have your rate of change here flipping, and again, one of the things that I like to mention to people is we can just roll over like yesterday, right? It's all headline driven. So, right, we're going to get into like layer two, right? So what does that really mean, right? So again, we have the makers, the equipment, the tested materials, the neighbors, the buyers, etc., 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 right? So, right, what happens, right? Price explodes, right? Price explodes. What does that mean, right? So memory contracts prices jump nearly 58 to 70%. Memory contract prices jumped 58 to 75% in a single quarter, and buyers have no choice but to pay it, right? Because why? They have to buy it. So what does that mean, right? So the makers, right? They own the factories and they sell the chips, the same factory, same staff, same cost, right? Double the price. Almost all of that increase drops straight into profit. This is where Micron printed a 345% revenue growth, right? So you go over here, right, to layer two here, right? So why did Micron go up here? Understanding the macro and the fundamentals, right, can help you understand the technicals. Sometimes, right, people don't even need to trade with charts, right? Just look at a headline, right? Okay. Come back here. So again, the makers, same factory, same staff, same cost, double the price. Then we have the equipment, right? Still waiting. Chip makers are busy counting money, not buying equipment, right? So this is kind of right like nothing yet. These guys are making a fortune, right? But nobody else is really kind of making what these chips are making, right? The makers. So right, we have the equipment: AMAT, LRCX, KLAC, ASML. Let's go over here and take a look at the charts here. Okay, so we have right layer two, layer one. I don't know, whatever. It doesn't matter, right? You can label these however you want, but the point is, right, you have layers like skin, right? You have your epidermis, right? You go lower, lower, go higher, 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 right? Each one serves a purpose and a function. That is the point of the term layer, right? One layer serves a purpose, right? Another layer serves a different purpose. Okay, so we look at AMAT, right? We look at Lam Research, we look at KLAC, we look at ASML, right? They all tie hand in hand. I think one time that people forget in the space, right, is kind of think about like a house, right? So, right, you call it layer one, layer two, you have the home builder, right? You can use whatever analogy that works for you, who builds the frame of the house, right? But the point is, right, when you're building the house, when you see houses being built, you see all sorts of different companies coming in. People laying specifically concrete. Some people specifically just laying down carpet. Some people specifically just doing, electrical wiring, right? Then you have all the way up to like people just kind of verifying that everything's correct, right? You gotta get permits, inspectors gotta come out and make sure everything is legit here, okay? So you got plumbing, electrical, carpentry, framing, and so forth, concrete pouring, blah, 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 blah. And I think sometimes in the space you have certain contractors that are the jack of all trades. So sometimes you have companies, right, that they'll do the carpentry, electrical, plumbing, etc., 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 right? And I think that the problem that I'm seeing here, right, is a lot of these companies may overlap, right, but one might specialize in X, which could be why they have more contracts or revenue growth, i.e. growth, right, versus value, right? So, right, one of these companies, right, might just specialize in, hey, I make the best chips in the world. I do this the best in the world, right? This company might be, I'm good at this, I'm good at this, I'm good at this, right? So in the market, right, you're gonna have winners and losers. And what does that mean, right? Well, this looks like a loser, So we went over this on last Thursday's video. That's why it's very important to make sure to tune into these calls and watch the full videos here. Again, 5 minutes is not going to do you any justice when you're missing the bigger picture here. And I think that's why a lot of traders are struggling. I think that they really need to put the time and effort, no different from me, putting these things into the charts for themselves, right? A lot of people are in very bad situations, but then they watch a 5-minute video that's really 50 minutes, but they put 5 minutes of time into there, and then they miss everything else that I'm saying. So again, everything ties into each other, right? Watching just me talk about one layer and then you miss the rest of the video is not going to do you any justice. You might as well just not watch the video, okay? So I think the problem that we're having in the market here, right, you have winners and losers, and one thing that kind of frustrates me is they're basically allowed to kind of guide down, right? So the way I kind of view a lot of these stocks here too, right, is you have all these stocks selling down here, right? For me, right, they are priced to perfection, but then the problem with these stocks also, right, is during the earnings and et cetera, right, we basically have from earnings to earnings to earnings, we're going off of what they're telling us. And we kind of see what happens, right, when basically the math ain't math in here. You start to end up with companies that look like Meta, right? And again, when you look at the stock market, the charts kind of all look the same. One of my favorite charts to pull up, right, is the Nike chart, the Target chart, basically almost every ticker, right? There's a lot of stocks that haven't moved for the past decade. Intel was one of those stocks until what? Guess what? A headline. What did we talk about over here, right? Everything is almost like headline driven, right? Every time, right, the government does a deal with Intel, right? Intel rips up here. Intel was a dead buy, dead tape basically for nearly 30 years, and then all of a sudden, right, Trump says we're going to do a deal with Intel. What's really changed at Intel? And those are the things that you have to ask yourself. But I tell people, don't get caught up in the semantics and this and that, right? Sometimes people have a hard time believing that the market's going up here, right? But then it's like, hey, what happened here last week? Samsung said what? That there's going to be a shortage here till next, possibly running to 2028, 2029 here. So there's going to be somebody here shorting the market up here saying this is unbelievable, I don't agree with it, we're in a recession, this and that. You got to do what the market gives you, right? You got to take what the market gives you, right? Not what you think, but what the market's telling you, right? Samsung saying, hey, right, we have a shortage here, and then, right, people wondering why we gapped up from heaven here, and the charts start to look like this after, right, we thought we're going to have doomsday here. So again, those little changes, right, as a trader are going to make you very successful. But going back here to Meta, the problem with a lot of stocks here, right, is that they're losing trust over time, right? And the problem I have as an investor, right, is, looking at Meta here, right, how many quarters are you allowed to mess up here, right? These companies are like allowed to basically say, hey, we're going to do this, right? Comes out, 30 days later or whatever at their next earnings, like, hey, we didn't do this, we lost more cash. And it's like, so you on the last call said you were forecasting this, but you didn't do this. They know damn well what they're doing here, right? We've all worked at companies, right? Some of us are corporate, we have corporate backgrounds, right? The companies are saying X, Y, and Z. You're working at the company, you're like, man, people are getting laid off, this and sucks, right? So having an understanding of, right, this market's built on trust. Obviously, it's also built on lies. And that's where you start to see moves like this, right? Meta, right, their revenue's down, right? But they're wanting to spend more. And they've been doing that for a good while. So again, right, they got you here, they got you here, they got you here, and they got you here. It's like the chart's telling you exactly what they're going to happen, but everyone thinks, hey, it's different this time. Okay, I guess it is. Going back here to the layer kind of analogies here, right? We have the tested materials, right? We have the neighbors, right? They're still ignored, right? They don't make memory, so they never stop, so they never show up in the headline, essentially, right? But again, right, we have tested materials, right? That's onto Kamet, Bezi, ATEY, right? They get paid on every single chip made. That's something that people are forgetting about, right? What are good stocks to get involved with, right? Obviously not financial advice, but these are my points, right? How many people are trying to connect the dots here, right? People are saying, oh my gosh, Micron, SK Hynix, Sandisk, all these other stocks are ripping up here, right? But there's a lot of different layers to the trade, right? One headline can create 4 different trades. 1, 2, 3, 4, right? And even 5, right? Because one thing that people are forgetting, right, is the buyers. Memory is a cost to them, not a product, right? Does not mean calls or puts. That's my point, right? So their input costs just jump, right? And now they can't raise product prices anywhere near as fast. So, right, the margins get squeezed, and sometimes, right, that can be what? Bearish, not always, right? Going back over here to these other layers here, right? That's why it's important to connect the macro, the fundamental, right, and the technical, right? Layer 3, layer 4, however you want to analogize it. I think I just made that word up. However you want to kind of frame it to yourself, that kind of helps you understand and kind of break things down. Do what's best for you and do what works for you, okay? And so again, what's the point of me saying all this? As traders, right, this is our responsibility to take a look at these charts. How many of us, right, honestly, this year have pulled up, charts of QQQ, to the daily, going all the way down to 5 minute, marking your levels to the point where like this took me a few hours to do. Like I'm tired, I got a family, I got stuff I got to do every day. So what are we willing to do as traders, right? To get our levels. What are we doing? What are we willing to do as traders, right? To kind of understand what's happening in the market, right? Are we willing to go through all these stocks and kind of figure out, man, is Micron a good buy? Oh, shoot, it's up 50%. And the problem with that, right, is when you have these reversals, everyone's just watching, waiting, right? So, right, the market is basically, right, it's just buying and you're selling. That's literally all it is, right? So it's a 50-50, right? Are you going to be on the right side of buying? Why and when? For selling, and no different from buying, right? So again, some tickers are just really made from macro fundamental, right? You have technicals, but again, right, technically speaking, I don't think anybody could have said, hey, from a technical perspective, say SanDisk or Samsung or all these other stocks are going to go up like 1,000%, because everybody obviously would have put $50,000 in there or $100,000 and been like, millionaires, right? So again, understanding, right, sometimes, right, tickers are just macro fundamental, but then sometimes as traders, we have a chance, right, to get it from the technical perspective while combining it now in the future with that macro, right, and fundamental, right? What's the macro? The what? Okay, shortage of chips. What's the fundamental, right? We do need chips, apparently, according to them at least, right? Now, what's the technical, right? Were we oversold? Were we undersold? Why did we bounce, right? And again, going back to the macro, right? What happened? Short squeeze covering, somebody got liquidated, margin call, etc., right? So when you tie all these things in together, the charts really start to make sense. But again, you have to put that work in here to understand. Otherwise, again, we're going to be guessing, and guessing is what? Losing money. It's just gambling here, right? Right? Obviously, the market's all tilted against us, but my job and what I feel like I'm really passionate about is helping you connect all the dots together, right? Just because you miss out on Micron doesn't mean you miss the entire AI trade, right? Because again, going back here, right, we have layer one, you miss out on Micron, okay, shoot, we still have AMAT, right? Well, what did we just find out here? Test and materials, right? So you have companies here, right, and they get paid on what? Every single chip made. Oh, well, who's making chips and who's going to be shortage, who's going to have a shortage on chips? So 2028, right? Who has basically infinite, right, demand with less supply? Them, okay? Going over here to the 30-year yields, right, broke past, I believe, 2007 lows. Let's go ahead and take a look here. So basically, like, what is the 30-year and why should we pay attention to it? Obviously, we broke out to levels over here that we haven't seen since, what, 2007? I think the problem I'm having here, right, is they keep trying to gaslight us and explain to us why it's completely different from 2007. They're saying we have chips, we have, all this hyperscaling. You're using words like hyperscaling. Like, who? Like, come on. Like, you're using words hyperscaling. Like, be real with yourself, dude. Like, what does that even mean? Like, we're using all these fancy terms like capex. Why do you have to say capex? Right? It just sounds fancy. Like, hey guys, want to invest and this company has capex. Like, hey, want to invest in this company that's just spending more but losing less? They're a fixer for you, right? So, all right, when we look at the 30-year and how we kind of break it down and why it's very important, and I think a lot of people are kind of glossing this off because of the media, right? What is the 30-year, right? It's a loan that you make to the government. You lend 1,000, right? They pay you out 52 over 30 years. You get back at the end basically $1,000. Okay, so right, 5.28%, right? That's the highest interest rate we have in 19 years. And why does this number move? Lots of people, right, want to lend. The government doesn't have much to offer, right? So that number goes down. Few people want to lend, right? As to offer more, right? It has to offer more. Let me say it again. It has to offer more to get more people, to get anyone to say yes, right? So that number goes up. Right now, few people want to lend. Nobody wants to get paid back in 30 years with money that's worth less. So if this price keeps going up, that $1,000 won't buy much by then. So they demand more interest to take the deal. And why should this affect you as a trader? Why should a trader care? For two reasons, right? A totally safe bet now, right, pays 5.28%. So why buy risky stock that might do nothing? Money leaves stocks and parks here. Every loan in America copies this number. Mortgages, car notes, the loans companies, right, that they take out to build the data centers, right? So what's the bottom line? The bottom line is borrowing money is the most expensive it's been in 19 years. Why as tech starts the biggest borrowing spree ever, right? They have apparently an infinite amount of data centers to build, right? And all these, excessive chips, right? It's going to cost them more money, right? That's where kind of rate cuts and other things kind of come into play, and that's why companies care about rate cuts, right? If they're trying to borrow all this money, right, what helps them? Lower rates. To do what? Borrow more money, right? That's how things all connect together, right? You're spending less on the loans that you have existing, so instead of spending $50 billion a year on loans, maybe you can spend like maybe $25 billion, right? Piece up some of their cap space to, I guess, blow money like Meta, right back over here and make, terrible decisions and tell people, hey, it's going to be different this quarter, right? Because it was, apparently, right? Kind of going over here to oil, really nothing to talk about. I think that nothing really has structurally changed from a macro perspective. I think it's really difficult to kind of chart something like this. I really think this is more headline driven, no different from kind of how the chips are moving here. So right, I keep saying reference this, reference that, CrowdStrike, and again, it's kind of the same chart here. It's really a dangerous chart here. We can just break out here and scream past all-time highs. And some people are saying, oh, there's no way oil can go to 100 or 200 or 300, right? Nobody was thinking oil could go to 100. It happened, right? Nobody's thinking oil was going to come up here to 70. It happened, right? No different from how people didn't think, right, SanDisk could go up here. People are forgetting the biggest trade ever in one headline. So just pay attention to this chart. I think it's really important to not lose track of what could happen here, right? Again, right, what if Iran does this? What if Ukraine does this? What if Russia does this, right? Again, this is all headline driven, right? And we have a peace treaty, we have a deal, we have this, we have that. But again, week after week, it's the same story. Iran says, no, we don't. And there's continuing wars, right? Remember Russia and Ukraine? Russia and Ukraine, right? We have a war, we have a ceasefire. Like, these guys have been fighting for years. So what happens if the U.S. fights, Iran for years? What do you think is going to happen to oil, right? If the, in the market, globally speaking, if we continue this war? From a technical perspective, I guess on the weekly, you do have a dragonfly doji. People care about the colors. I really don't. Again, for this, we could open up Monday down 10% on what Trump apparently said. We have another treaty here with Iran here overnight. But again, right, I think that we have actual repercussions. This is different from the tariff deal, right? The tariff deals at the end of the day, right, there really wasn't any actual repercussions, right? People didn't have to pay tariffs, in my opinion, right? But the interesting oil and tariffs, right, is this actually runs the globe. We do, like, from a fundamental use case, we need oil. Like, there's no doubt about that, right? So there's an actual supply issue with the demand that is never going to end at a glance now, right? And the fact, right, that the strait is still closed and or being interrupted, right, I think that's being really underestimated and downplayed by the media, of course, right? Don't worry about oil. We're going to have it under control. Well, you don't, because the strait's not open. You keep saying you're going to do something, Trump, but you don't. Coming over here to the VIX, I mean, really nothing that I can really take away from this. People talk about, oh, it's currently up, it's doing this, right? But I mean, the way I kind of see it here, right, even when you spike up here, let's see here, let's just do from February 20th in 2020 to, I guess, here. I mean, it's short-lived here, for the times that it peaks here. Just, it's very short, very short, very short. So sometimes people say, oh, the VIX currently up, and it's been currently up like for the past 6 years, and the market's been doing this. So when people start talking about the VIX, I'm just like, it's really not, for me, a really good tool to use. I mean, I don't know. I mean, you can go down the short time frames, but again, it's volatility. I mean, the market's volatile, right? The market's pricing in fear, right? I mean, I don't know about you guys, but I'm not afraid of anything anymore, because I mean, the headlines just keep getting written off. We drop down for a few days, Trump says no, that's not true, and then we go up here. So again, this, different from a lot of other tickers, right? I just feel like it's manipulated. It's very hard to utilize the VIX here. Sometimes there are clear signals that I've observed in the past, but it's very hard and difficult to say, hey, the VIX is curling up here, and we pop up to 30 or 20, 5 days, 6 days, and we're back down here right where we started, right? So the VIX is still here at 16, and again, we've gone nowhere basically since October. In fact, in October, the low of 2024 was, I believe, 12, and again, we're here above 16. So, I mean, again, you can look at the VIX, you can do whatever you want, but it's very hard to do technical analysis on it. I mean, it's just something that I don't think you need to spend a lot of time on, okay? Coming over here to the USJP, the carry yen trade, a lot of people are forgetting about this as well. I think one thing that people are forgetting about, right, is, so I have a flyer here, right? What is it? What happened? Why should you care, right? So basically, right, the USD divided by the yen, right, is 157.4 right now. So $1 buys 157 yen. Why is that important, right? So up means, right, the yen gets weaker, the dollar buys more yen. Down means, right, the yen is stronger, dollar buys fewer yen, right? What's the carry trade, right? You borrow the yen near 0%. You buy U.S. tech, right? You keep the spread, and then right until the yen jumps, everyone unwinds at once. So what just happened? So on 729, right, yen hit 164, a 40-year low, right? 730, right, Japan's MOF buys yen, snaps back past 160. What happens on 731? The U.S. Treasury buys yen too. First time with Tokyo and 10 plus shares. And we closed here on Friday, right, 157.40 at negative 1.31% on the day, while the yen was up 3% on the month. So what does that mean? We can buy fewer yen, which means what? What's the carry trade? Borrow yen near 0%. You can buy U.S. tech, keep the spread until the yen jumps, and obviously everyone unwinds at once. So why NQ traders should care, and just generally speaking, just the day trader and the swing trader, whatever you want to call it, right? So August 2024, right, the last time it broke, we had topics, negative 12% a day. The Nasdaq went over negative 30% over weeks. The S&P 500 went negative 10% in days, and the VIX, right, the third biggest spike ever. So what do you want to watch? The speed of the yen moves, not the level. The Bank of Japan rate hikes chatter. G20 Asheville end of August, right? Besen ex UEDA. Okay, and the size of the trade is disputed, right? $261 billion versus trillions market. Going over here to Microsoft, one thing like I want to point out here, kind of I guess why people saying that it might go up, etc., right? So obviously in previous quarters here on earnings, you just collapse here, right? And one of the problems that I was highlighting earlier this year was they had a record revenue. So when you have record revenue, right? If I, imagine that you're an athlete, you run the 100-meter dash, you set a world record. Well, they set their own record, right? So it's very hard to break a record. So what happens when it's hard to break a record, right? Right? So you run like a 9.9 100-meter dash. Maybe the next one you run like a 10 second, next one 11 second, right? So it's very hard to kind of replicate and beat your own results. But when you do, okay, then this is what the chart looks like here. So right, we have no capex increase previously that I think they were penalized for, right? So even with Amazon, there's a lot of companies, right? They're spending, and right, what does the market, why does the market sell off, right? You're spending more, but you're making less. So Amazon was able to clarify where, again, this is where the videos tie all into each other. Google, right, didn't really give any, I guess, good explanation to why they're raising capex, whereas, and they have negative free cash flow, or again, guiding down lower. Whereas Amazon, right, where they had more capex spend with basically, also negative free cash flow, or you can say flatline. And again, one thing I want to highlight is why were all these companies unable to fund OpenAI? Maybe it's because they didn't like them. Maybe it's because it's a scam. Maybe they want to back out, not a good deal. Maybe headlines. Maybe this. Maybe that. I'm going to say they didn't have the money, even if they wanted to. They didn't really have the money to justify spending. They didn't have that much free cash flow. That is the truth that nobody would tell you. I will tell you that first. So right, we had no capex increase previously, and they were penalized for that. They had growth accelerating on all fronts, and basically what was missing was Azure, which missed huge last quarter, and I think the previous couple quarters. And they also have a backlog here, just like SMCI, right? A quote-unquote backlog. And I think the problem I have with this backlog, right, is no different from how you and I can back out of a deal. Let's say, hey, you want to sign up for the Discord, this and that, right, which you guys should. You can just back out at any moment, right? So I can have 50 members, right, say, hey, I'm going to pay you $1 billion, right? But then what happens if they all back out? Well, then this backlog is, guess what? I'm trying to make a funny analogy, but I can't, right? It's just gone. So guys, basically, kind of summarize it on previous quarters, right? When stocks dropped due to kind of high spin, which is capex, right? Investors can now see where their money went and if it was spent correctly, right? That's where it ties all back into Meta, right? Well, to me, I'm like, you did not spend your money correctly, Mark Zuckerberg, and this is happening again and again and again and again, all right? Going back over here to the chart for Microsoft. So again, on previous quarters here to re-highlight or recap here, it feels like their money was spent correctly, and now it's justifying, right? No different from Amazon. Hey, you guys weren't making that much money or losing money, etc., etc. You're guiding down, but now we feel comfortable, and maybe this is what a growth stock starts to look like. Going over here to AMD, some big earnings heading into next week. One of the things that I like to highlight is, when I pick earnings, or if I ever play earnings, I rarely do. I'm gonna look at the implied move here. So one tool you can use here on TradingView, right, is what's the implied move here, and right, pay attention to like. What are they looking for? I can't talk. One thing I like to highlight right here for different earnings is what is the implied move here. So one tool you can use here, again, that's free on TradingView, is just go to the price range. Where are we at here? 476. Let's go to 476. What's the implied move here? 12%. What does 12% look like? 12% looks like right here. And then, what's the average move here? I don't know if it says there, but I'm just going to try here. 12% here, and then we're going to have 12% down. So your implied move here is basically plus or minus, $60 here. What also can you do here on earnings? Flatline. So it's sometimes, right, if AMD comes in line, right, they just beat, not sexy, not great. It's like, hey, you just met your own expectations, right? You can just flatline and or drop, because Wall Street was like, hey, you guys are priced at perfection. Again, you're talking about bullishness. You're up here increasing by $1 billion here, but like, you didn't really guide higher, and also, your numbers were not impressive, right? So in this market, you're gonna have winners and losers, no different from how I'm showing you these charts. One company might make $1 billion, one company may not, right? That's where you're gonna have charts that look like this, and then charts that look like, this. So again, right, what moves it, right? MI 450 ramp commentary. So right, Meta deal, OpenAI deal, both slated to start. 1GW deployment in H2 2026 timeline. Yield or volume changes move this more than right. Q2 does. Obviously, we need the Q3 guide, not the Q2 print. That's where the reaction lives. So again, if they say, hey, we had a shitty quarter or even a great quarter, and we're going to guide even higher, and et cetera, right, that's going to move it, right? So the bull case, right, is the M150 timeline confirmed with the volume detail, right? So the last reactions for that were plus 25% and minus 20%, right? So this is the name that gaps it. It doesn't drift. Obviously, bear case here for AMD is any M150 chip, 450 chip, right, slips. So right, the stock is up 115% year to date. So that bar sets a high price, and its positioning is crowded. CapEx, right, which is spend, matters enormously, right? Someone else's money, right, essentially in the stock. Hyperscalers guided $725 billion for 2026, up 77%. And AMD's order book, right, is a direct claim on that pull. The reaction history is about 25% here with those deals, et cetera, right? So basically versus 7% implied. And obviously we had negative 20% in February 2026 versus 6.1% applied. So again, right, we can break this straddle. We don't have to follow these numbers here. It depends on what they say, and that's why we're trying to develop trust in this market. These companies are saying we're going to do X, Y, and Z, but sometimes and half the time, they're just not doing that. So again, that's where again in these videos I try to combine all these thoughts to help and give you a chance to see how does Wall Street really think, and like what should we be doing as traders to really give ourselves a chance to be profitable in this rigged market. Going back over here to SPY, kind of ending with some of my closing thoughts here. I think, in my opinion, right, so I call this the 5 stars, right? The same chart, the same ending 99 times, right? Look at Nasdaq, look at SPY, look at Soxo, ASML, all these other stocks, SNDK, all these other layers here. It's the same chart again and again. I mean, crude, you can go to gold, any stock, right? Microsoft here, AMD, it's the same game, Amazon here, right? So, where I leave you with here, guys, is right. What's the story, right? This is one story. Numbers so big they can't be checked, right? We have all this backlog, we have all this memory. It can't be fact checked, right? So right here is about trust. A total market figure for 2030 with basically no denominator. Nobody is asking who's going to pay for it all, right? Number 2 stars, right? The beat, guide low, beat high, right? Raise, repeat. The stock gaps up every quarter, right? And everyone in that chat becomes a genius, right? So like I interview for a job, right? So sell myself low and perform high, and stay kind of right here and just perform, get my promotions, like a stock chart going up here. Then we have the 3 star, the circle. Suppliers fund their own customers, right? The infinite money glitch. Money leaps through the sector and gets booked as revenue at every single stop. That's where you start to have charts that look like this. Hey, we're doing this. Hey, we're doing this. Hey, we're doing this. And who's funding it all? NVIDIA. Okay. Now, I'm not saying literally NVIDIA, but like that's my point. So the circular kind of finance called the circular jerk. You have the revisions, right? The language changes before the numbers do. Oh my gosh, shoot, like Oracle, like all these other charts. Oh, we're guidance is low, Apple. It's like, dude, what are you saying? So, right, when you have deferred installations, right, near-term visibilities as well, that is the tell. And then we have the 5 star, the exit. So insiders are selling on the whole way up. File, disclose, legal, the back lands on whoever bought the story last. It's like Pokemon, right? All these Pokemon cards, all these different things like shoes. Hey, $500 here. This guy says, okay, I'll pay $550, right? It just goes up and up and up. And who's left holding the back here? Man, these Air Mags are out of whack now, or they're out of style. I don't want to pay $1,000 for them. I'm going to pay like 50, right? That's where you have charts that just implode and start to look like Meta over time. And again, the mistake that people make is, again, they don't do the due diligence. They come back here to Meta, right? Well, look at a stock like PayPal. Why was PayPal up here to begin with, right? So when we start to ask these questions, why PayPal was up here to begin with, why Target was up here to begin with, why Oracle was up here to begin with, why MSTR was up here to begin with, right? Same chart every time, same story. Adobe, right? I don't need Adobe to make my butt look bigger and have 6-pack abs, like, right? I can use Apple, right? Apple has software. I can use AI. AI has software, right? I can use Gemini, Claude, ChatGPT, et cetera, right? So that's how it all ties back in together, right? So, right, none of the part that bothers me, right? The part that nobody says out loud, none of what they're saying on the calls is illegal, I guess. Apparently, guidance is protected, forward-looking statements, revisions are not lies, I suppose, and right, inserted sells are filed in advance, right? So exit liquidity is you. That's not a loophole, right? That just basically is a system, and it's not categorized as fraud. It's worse than fraud because basically fraud can be prosecuted. This can't. And right, one of the questions they have here, right, when it ties into all the layers, right, because the entire trade right now is AI, right, is one word, 2 completely different things. So right, your company's data center, a closest or rented rack with some servers in it, maybe 50K, right? Every business has one. Microsoft, Oracle, like everyone's just data centers, right? I should build one too, right? So this is not what the AI money is chasing, right? You have an AI campus, right? $1 billion warehouse that uses as much electricity as a small city and needs 4,000 workers to build it. This is the thing that's scarce. So right, here's a test, right? If they overbuilt, the buildings will be empty, right? North Virginia, Atlanta, all U.S. markets, right? Not built yet. Let's say 8 out of 10 already rented, etc., right? So what this means, basically, in a nutshell, right, is they're not sitting empty, right? They're full. But here's the thing, and the ones still under construction are mostly rented before the concrete even dries. Normally, 4 out of 5, normally only 4 out of 5 out of 10 are pre-rented. Right now, it's 8. Pay attention to that number. And I guess, right, here's the question, why can't they build more? And it's only one reason, I mean, there's more, in my opinion, right, because we talked about, like, rate cuts, rate hikes, US 30, it's costing them more money to raise, etc., right? You can pour more concrete in a year. Getting connected to the power grid takes 4 to 5 years. That is the wall, right? That is the bottleneck of the trade, right? So, right, that's the wall. Capacity under construction actually fell this year, not from weak demand, but from permits and power, like we talked about, right? You have all these people in a key equation. You have the builders, framers, electrical people. You have the people pouring the concrete. You have plumbing, carpet, and so forth. So what happens when that happens, right? The real risk isn't empty buildings, right? The real risk is the chips going stale. So, right, the building lasts 30 years. The GPUs inside lose most of their value and view. You can have a packed data center full of gear that nobody wants to rent, right? Cracks are already showing, not in Virginia, but overseas. Right, in Cortado, and I don't know how to pronounce that, in Hong Kong and Bogota, I think this is Cortado, I could be wrong, right, they're already carrying double-digit vacancy, and basically utility forecasts may overstate demand by about 25 gigawatts. The number one thing to watch here is, right, pre-leasing. Right now, 8 out of 10 are being rented before they're even being built, which is crazy. I'm not going to pay somebody for a house that, it hasn't been built yet, right, because that's what they're doing. So when that slips back toward 4 or 5, right, it means they've started building on hope instead of contracts. That's when the overbuild call becomes right, and that's when you get maybe mean reversion, okay? Going back here to Amazon, like I was telling you before, the charts are kind of all the same here. I said squeeze zone reference crowd. I'll show you that here in a second. Here's your put wall for NVIDIA. Here's your point of control, here's your put wall here for Amazon. Here's your point of control. Here's your value area low. Think about it like a flush zone here. This is what you really want to hold here. You could say support. I call it put wall here. And again, here's your squeeze zone right here, right? And again, referencing crowd. What does crowd look like? Let me show you here in a second. So we go here to crowd, right? And it's the same chart every single time, guys. It's like clockwork. Hope you guys have a blessed weekend. I hope you guys pay it forward to other people. This is financial advice, just my own thoughts. And again, my point is I'm really trying to help traders understand how I view the market and maybe how Wall Street views the market here as well. Don't be the person looking from the sidelines every single day when people are running, right? You're chasing puts here when Samsung literally said, right, in one sentence, something that should have raised your eyebrows and said, man, I probably, maybe not hopping along because it's dangerous, but definitely don't go short. But you had a lot of people going short here and they got wrecked. That's it, guys. Have a blessed weekend.